Okay, hi guys, this is Kerns, and this is the lesson 13 of the part 1. We are getting very close to the end of the first part of this class. And in this class we're gonna talk about channel. Okay, for this one, I always start with a quote, but this one we're gonna start with these two ones. O Lord, open his light is high, so we may see. Then the Lord opened the servant's eyes, and he looked and saw his hills full of horses and chariots of fires all around Elijah. That's how technical analysis was born. And that's Jesus said, who have ears to hear, let him hear. Now I think that was when fundamental analysis was born. It's generally one way me and a couple of friends we used to have fun of each other when we're discussing about which one of the type of analysis was there first, and then we said, well, it's in the Bible, and then we read this part, and after that this one. So that's the code for the lesson 13. I mean, 2 codes actually. Another things we can say about technical analysis is actually you are learning to read the mind of other traders, other people, other actors in the market, or you are using charts to have a clear idea about what is going on. So we're gonna try to see if, well, I wanted to go ahead and do some kind of explanation about a trend line, because trend line is a very interesting subject, but we'll have to go back and talk about this again. So let's keep going. I'm gonna make another video specifically to try to test what we learned so far in a different market. Okay, now let's get into the channel. Now channel are made of trend line in a line that is parallel to this specific trend line. This line is called the return line. I didn't mention it here, but that's the name of the line that is parallel to a trend line. That's a simple definition, and then you need to keep it simple. Okay, do not make a big deal about channels. Now trend line, okay, so they are made of a trend line facing a return line. Okay, let's just take a look. Now that's a channel, what we call a descending channel. Now these are supposed to be a downtrend line. The line facing this trend line is called the return line. Okay, that's a Ethereum chart here. That's another one. In this situation here, that was a daily time frame, and here it was a 4-hour time frame. Here we have a small downtrend line, and then facing a return line in a downtrend channel. So this is supposed to be a downtrend, but facing it we have, every time the price action reach the other line, which is the return line, kind of bounce overhead. All right, another example, which is not well designed, but that's still Ethereum 4-hour time frame. There is a very clear explanation about this violation, and we're gonna talk about them in a couple slides coming up. Now trend lines, they are often used by day traders and scalpers when going against the trend. So this means that they tend to use them in small time frames. Trend lines of a channel follow the same principle of and rule of any normal trend line, remember there's two lines in a channel. There's a trend line and the return line. So when it comes to the trend line of a particular channel, it's the same rule for a trend line, but the violation of the return line is called an exhaustion. Now generally there's two things that happen. I'm gonna try to get into the whiteboard because that's probably you need to be aware of this one. Now generally what happened, sorry for the noise, is that when you manage to identify a trend line, you have the trend line. Okay, you have the trend line. Let's just make it less sharp. You have a trend line that in this case this is an uptrend line, and then let's say you have a bull trend. Every time we reach the trend line or approach it, we kind of bounce off of it, and it's something like this. And then facing that trend line and parallel to it, you have return line. Okay, now what happened is, in this situation, when the return line, this is the return line here, so this is the trend line, this is the trend line, this is the trend line, this is the return line. When the return line get violated in this situation here, in order for the trend to keep going, you have the formation of another channel that is a little bit more sharp than the previous one. So technically you're supposed to have another trend line like this, but often after the violation happen, you have a failure, which means we get back into the channel, and generally this zone right there is called exhaustion. Exhaustion, I think it's exhaustion, and we're gonna explain what they are and what they really mean for us swing trader. But day traders and scalpers, they use them a lot because generally they tend to look for zone to enter against the trend. Okay, because we swing traders, we never, I don't know any swing trading strategy in which you have to go against the trend. So we never go against the trend. So this is the type of thing you might hear in the market, and this type of discussion, this specific subject doesn't really, you need to know because you are in the market, but it's generally you will, most of the time you'll use this to close the position than to enter into another position. Okay, so that's the small explanation that I want to say about that. So exhaustion, they are very predictive of a reversal. I'll give you an example. This is the downtrend line, and then what you got here, we violate here one time, we get back into it, we violate it again, we even manage to open and close outside of the trend line, down the return line of the descending channel, but we get back into it. Generally, if you were in a short position here, you will have looked for a reason to close that position. Another example here, that's a weekly time frame, and that's Bitcoin US dollar, and that was the bull market of 2017. We were trading into that specific channel, so we touch here, we approach here, that's literally 3 touches and even 4 touches over here. But what is interesting is we managed to touch the return line like 4 times. It reacts 4 times, then it violates it, and then we get back into that channel. Generally, when you see this is pretty predictive of a reversal. Now this would have been not reason to short. The reason to short is here. Let me try to mark some stuff for you. Yeah. Okay, so this right there is the exhaustion. That's not a reason to short the market. This is a position in which you might thinking about closing some short, some long. So you were probably long here, or you were buying, investing, I don't know, because that's a weekly time frame. So here, that's a sign, that's a sign of reversal. Then you will need to use other indication, other different type of studies to find confluence, which literally means find other indicators that are saying the exact and same thing. But here will have been your zone of short, okay, because that's a trend line that have been established for more than a year, and we get violated here. This is a zone in which you could have looked for enter short position all the way down here. Now this is a selling signal, this is not a selling signal. Okay, very important. Those kind of differences, they can make a huge difference in your trading balance, actually, because so often, for an example, when I was talking about support and resistances, I realized that there's a very few people who didn't know that they cannot use, or they should not use, supports and resistance, particularly when we're talking about statics, support and resistances. You cannot use them as buy and sell signal. I'll give you an example. This thing right here, that's not the subject, but very interesting. This one right here, you could have, well, taken for an example, all this, it's anywhere here, it's 1, 3, 4, 5, even like 5 times I've been touches, 5 touches. Now this is a support. When it got broken, we violated pretty intense sell-off. Some people were expecting a reaction. We didn't have any reaction. So if you did short here, and you probably blow up your account. So that's the reason why you cannot use support in statics. I want to say that you cannot use statics, support and resistance for buy and sell signal. They are not useful for that. They are more likely to anticipate reversal. I think I told you that, and I'm just repeating myself here. Okay, so this is the last slide of the lesson, and I told you that's supposed to be a very short lesson. Here again, that's another situation of exhaustion. I think that I'll show you that short. Well, that's all we have to say about channel. Okay, technically you have your trend study. You know that you are trading in one direction, and then there's a very few setup that you need to follow when you find yourself in the channel, and after that, that's pretty hit, because we're not going into anything under 4-hour time frame, and we're not trading in anywhere under 1 daily time frame. So all right, so that's it for lesson 13. I think that has some example that I'm supposed to give you here, using trend lines. I just have to check that again. So that's it for lesson 13. Okay, if you have any donation, remember that we have all the addresses on the description below, and remember to subscribe, like, share, go ahead and comment. You know, I'm hoping for any type of comments. You can just even put your personal experience about some specific notion in trading, if you are swing trading or any type of trading style. All right, then, take care, guys. Bye.